Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our Broiler Chicken Show, which I like to do, especially through the school term, as a nice dovetail for the level oneers. We're live on YouTube. So, probably a good portion of this show that we happen to do on the public will be directed towards level oneers, because we did risk management module this week, which is pretty thick, pretty steep learning curve. And I did see that there were a few follow-up questions. I think the TAs from the class are here. At least I think I saw one of them. Oh, excuse me. Yeah, there's Kevin. Kevin, did you have that document that they were passing around? I don't know. Maybe you could slide a link to me, of that. And I think there were a few questions left over, so. I suppose while I wait for that, level oneers, if you can help your TA out, if any of you happen to have that link, if you can just throw it in the lounge there for me, we can jump onto that quickly. But I suppose just to get things going, we'll do just a quick overview of what I see sort of happening. I think I even remember on the free video that I did on Friday, I sort of said, it'd be interesting to see what happens through the weekend. So here we are, broiler chickening. The dashboard's now starting to give us some interesting usable information. I do see the breadth indicator. Flashed a bit of an overbought signal there. Typical sort of oscillators you get above 70, 80, and these kind of oscillators all start freaking out. So not a big surprise to see that we ran into a bit of a brick wall there, I guess middle of last week. Also too, and this is a really good education for sort of site members and myself, like we all consider ourselves students of the market. Thank you, Milos. But on top of the fact that we have this insane 2020 celestial year, and oh my goodness, this is going to be one for the record books, that's for sure. And maybe go back and watch previous Broiler Chicken shows, fast, 2x speed, fast forward, whatever. I do make reference in the past of what I sort of expect this year to look like, comparing it to 2019. I think I put tweets out too, if you want to go and follow sort of our official Twitter feed. I wouldn't mind actually transitioning this out of this and make this more TRI. This is just my old personal Twitter, but anyway. But if you scroll back through here, did lots of conversations in the past of what I'm sort of expecting there. So it's going to be a wild, crazy ass year, but I thought it was really cool how we did have a very interesting celestial event happen over the past week, and how the market itself had to sort of wait for this sort of fundamental driver that was sort of going to be the trigger for that sort of celestial pivot to happen. And literally, we have a rule at TRI, don't trust the first hour following a Fed announcement. Sure enough, the Fed did its announcement. Mr. Powell had his speech, and it was kind of a really weird speech because it certainly wasn't optimistic. The market subsequently fell apart. Anytime central bankers tell you that they don't have any plans to raise interest rates for a good year and a half, that must mean that they're not expecting growth. They're not expecting inflation. So that was a nasty message from Mr. Powell, and I think it was kind of like a sort of slap on the face. I had made reference in previous Broiler Chicken Show. There was a interesting fund manager I watched a video on when we were sort of going through the trough, and it's fascinating how sort of people's memories of they forget stuff so quickly. I was asking people on the site about who was the politician who got their ass in the ringer for selling stock up here, and nobody could remember his name. There was also another female politician that got into a lot of trouble, and everybody in crypto, of course, knows her. Hey, there you go. Peter. Leave it to Peter to know. So I find it fascinating how when we go through these wild gyrations, people's memories are so short, but I did find it, we had lots of sort of anecdotes that, hey, investing in stocks is really easy because people really only seem to remember the past month or two of their lives, and how this is a no-brainer and we can all get rich just buying stocks. And of course the market just says, yeah, right, thanks. Thanks for coming out. I suppose what's really interesting off of this 4-hour chart, and this is so cool. This is such a good analogy of algorithm trading. So, I have this funny little algorithm that basically measures the entire broader market and using both price and volume analysis. And what's so cool about it is it's universal. And then what it does is it asks if multiple time frames are all sort of agreeing. And then the ultimate sort of cherry on the cake is if the shortest time frames have started to agree with the higher time frame trend direction, it gives what I call an Uber reading, which is like a +4 reading on this little indicator. And this is a cool site member. It's such a great analogy of TRI. This gentleman lives down in Australia, and he came all the way up to Vancouver for our TRI meetup. So cool hanging out with those guys. But he and I put this algorithm together and built the code, and it's so beautiful that when it spits out an Uber reading, in essence, all the momentum indicators are all pointed together, and all you do is you just look for market structure. And hopefully everybody looks at this. Great analogy for the YouTube audience. What are you supposed to think if you ever see the market smiling at you? I mean, what a beautiful smile. Ay, ay, ay. And then boom. But what's so cool about this algo is sort of the rule to trade the algo is you have to let the market go Uber, and then you just simply take the first market structure. So consider, I'm a big fan of, all right, so, here we go. Time for Brian to quiz everybody. How many reasons should we have to consider taking a trade? And actually this is a really good analogy because, those people that are location fans, you should look at this chart and go, I bet you we're getting up into those things like reload zones that Beamish guy likes, right? In fact, in this case, we are at or above a reload zone. Well, it sounds to me like a good place to think about shorting. Location, location, location. What do you get? I think the odds, I'd be curious to see what the odds are if that was good old Ian's 88.6. Probably was. Let's see. Oh, no, that's still a little bit higher. Yeah, maybe we can go a bit higher. Anyway, it topped out where it did. So the point here is we got location. Then we want to go and find indicator confirmation, rule number 2. And it could be something as simple as building a algorithm that tells you when your indicators are telling you to act. So in this case, this is a script. Like I said, we teach this actually in the level 2 program, how to build and write these scripts. And actually, we even give this algorithm to students. And our marketing guy's like, are you crazy? That's like $1,000 product right there, and you're just giving it to people? What are you, nuts? Oh, well, what can you do? Crazy Brian. Anyway. So really good analogy, pretty healthy looking sell signal there, and kaboosh, down she goes. So I don't think it. And what was really interesting about this, like I said, is it had all the smatterings of just the absolute cliche. where Warren Buffett's made fun of by the public. This funny little celestial event that our one of our newer members affectionately goes by the name of Krispy Kreme on the site. I don't think he wanted that name, but that's the name he got. Landon, very intelligent young man, so I think he's heading in a good direction. And then, like I said, what was really cool about this was watching this all develop and play out following the Fed announcement, which was so cool. And I hate to say it, guys. I mean, it could be something as simple as, learning about things like when the market's smiling at you, what should you be thinking. Also, too, this is a great buy the rumor, sell the news. Like I said, Landon wants to sprinkle in some celestial pivots there. Let's get our astrological calendars out, hunt those setups. It was just absolutely beautiful. So that's sort of what we've been at the site sort of following here, is sort of how did this sort of reaction following the Fed play itself out. I think probably, what I usually do is, Monday to Friday kind of thing, is we go off of, a little metric here. So just the overall picture, and I talked lots in the public how I think that U.S. dollar index move there was a trap. Same thing as the stock market. Mr. Barstool, he was kind of set up to get run over there. Just such a shame. I think there was just the most beautiful trap laid in all the currencies. Everybody getting long euros right at the top. I am, curious to see that the crude oil market does actually have a very well-defined M top working. So we'll see if that gains any traction. And for whatever it's worth, I've now watched about 4 or 5 cycles. The energy market always leads everything. So as soon as we start to see some sort of firmness, especially through the meltdown. In fact, actually, you can even see sort of here. Remember, this was this crazy expiry. But remember, we were sort of humming and hawing, what's the market going to do? And the crude oil market was the market that led the risk on higher here. So does that M mean that, maybe risk on's got to cool its jets for a bit? Probably. I don't know whether you guys are seeing, we have been talking about it in the public quite a bit, on the site and stuff. Really, I think we are now into, and, the worst part about all this sickness and this virus is nobody said right out of the gate, we're going to cure coronavirus. Nobody ever said that. What I heard was flatten the curve. Well, what does that mean? Does that mean we're all still going to get sick, whether you like it or not? We're just going to it's just going to stagger us over time. They just don't want us all to get sick all at once, or else we'd be stacking up people on the hospital beds. I think, sadly, that's what flatten the curve really means, is that they fully expect everybody to get sick. They just don't want us to get all sick at once. So that's, obviously it doesn't fill you with a lot of joy. But what I find fascinating, I mean, this is talk about sort of this crazy human experience, is the way that, to sort of help the virus along, we've done a whole bunch of things as humans that you go, well, why are you doing that? There's a big virus going around. Why are you doing that? All this social unrest and all that kind of stuff. I mean, gee whiz. It shocks me how, it's kind of like Robin Williams. I mean, everybody knows that the stock market's a crack addict. So as soon as the market broke, right, what do the politicians go? What do? They go and feed the crack addict. Oh, goodness. This crazy world, man. I don't understand it. I mean, this is a perfect analogy of a market top if I've ever seen one. Anyway. I'm sort of rambling here. Sorry, everybody. There was 1 or 2 things. I thought it's too bad this is so out of focus. I don't know why the hell it's out of focus, but I thought this was hilarious. The more things change, the more they stay exactly the same. And I did find, from a crypto perspective, I did find this story fascinating. This really actually caught me off guard. Where the hell's Mr. Wonderful? Where the hell this right here. And really, I don't think this tweet really did it justice, because I was really impressed by the fact that our community is just keeping us on top of everything. But I did find this fascinating. Was Craig Wright really the one who was responsible for Mt. Gox? That is such a fascinating twist. Did not see that coming at all. So that's fascinating. Love to see where this story leads us. Man, can't write better fiction than reality in this crazy world, I tell you. So, I think, this is what I'm worried about right now. Is, of course, they opened up everything. And, hey, us in Canada, we're no better. I mean, they had the big opening up there a couple of weeks ago in Toronto, and the parks were absolutely jammed with people. And it's like, what are you doing? You're just helping this thing along. Texas had sort of led the pack a couple weeks ago, maybe even a month ago, saying we're going to open up, we're going to open up, we're going to open up. So I personally was very curious to see how Texas was going to go. What I've been sort of seeing now, I know a lot of people are kind of like, well, but they're doing more testing, so that means there's going to be more cases. But I did find it interesting how they're tracking hospitalizations, people actually needing to go to the hospital, and they're saying that that's starting to ramp up. So, the worst part about this now, this stupid world we live in, is there's probably people going to be looking at this going, oh yeah, but this is politically biased one way or the other. I mean, I don't give a shit about that. As Bill Gates said, and of course a lot of people picked him apart for it, but, people... Dead bodies in the streets, dead bodies in the street, gee whiz. Get ready, everybody. Here we go again. So, and the numbers, they are saying that they're starting to ramp up. So, just be forewarned. That's kind of the backdrop that we're in. And, in that kind of environment, is it really sort of risk on? Do you want to take a lot of risk in this kind of world? I would be damn careful. And the worst part about it now for the stock market is people don't realize that the stock market now has, number one, it's actually given all the professionals this counter trend rally what we say, and this is, this is probably pertinent for the level oneers for this upcoming week, because I think you're doing fibs this week now. They finally got through eating their vegetables. Oh boy, I bet you they are absolutely sick of Brussels sprouts right now. And they're off to the candy store. No, they're on the couch now. I don't know, maybe not. But anyway, point here is what we, the way that it was always taught to me. Yeah, thanks, Brian. The way that it was always taught to me, and frankly speaking, I really like this thinking, is look at this funny little reload zone concept of Brian's as not really, how do we describe this? It's a good trade location for us to think about going short, because institutional players are not, while the market is melting down like this, they're not really allowed to chase this market down. Like the public, of course, is freaking out. Believe it or not, the institutional players are like, okay, if you want to go buy some puts to cover your ass or something like that, or, if you got some marginal trades on, square them up, whatever. But if they... keep in mind, it's interesting. It's just like governments. Institutions kind of work, a bit like dinosaurs. So institutions, to all intents and purposes, are thinking, this is a bull market, and especially this is an interesting one because we're supposed to see seasonal strength into May, June. That's what's supposed to normally happen. That's how Wall Street gets paid. But the point here is, institutions have to look at this. They're not allowed to chase down markets. But if they do think that this is now turned into a bear, they will want to unload. They will want to square up long positions, clean up the books, get ready. If this is the recession, get ready for it. So, you can look at a price chart like this, and I remember when we were back in the dead of the crap, and you just didn't know what the bottom was. You can look at a price chart like this and say, well, if an institution, we can even hit, I suppose, the replay. Oh, I don't know whether this will work here or not, but no, it's a futures contract, so it won't work. Yeah, don't worry about that. If I'm an institutional player and I want to sell, I want to actually get short, that's what this reload zone concept is all about. If I am a bear and I am pointed down, where are institutions most likely to join that sort of down fight? And then, of course, if they are short off the top here, where are they likely to step back in? Keep in mind they get paid, and if they were short up here, they better as well ring the register down here. If they don't, they're an idiot. Where are they most likely to get back into that short trade? That's really the best way to use this tool, is to sort of, it helps you see the market the way an institutional player sees the market. They're not allowed to sell down here. If they sell down here and, and the market's oversold and everything's ripping down, and all of a sudden the government comes out and does some crazy bailout and guarantees and takes rates to zero. Could you imagine that? Government just comes out of nowhere and passes a, absolutely staggeringly large stimulus package. Has that ever happened? The central bank out of nowhere just says taking interest rates to 0%. Does that ever happen? Well, it just happened here. If somebody had come to me like 20 years ago and said, oh yeah, in one day, the U.S. government's going to basically almost like double its debt outstanding. And maybe not double, but a huge chunk. I think it was something like 14% of GDP or something. Just some insane number. And the Federal Reserve is going to take interest rates to zero. If I had said that 20, 30 years ago, people would have thought I was nuts. But here we are. This is our reality. Anyway, point of the matter here is that really, looking at this chart, ironically enough, it's actually quite business as usual, which is so ironic. So, if this is a bear, if this is, the recession, that's usually happens in years that ends in, 8s, 9s, 0s, 1s, and 2s. Here we are in a 0. What a surprise. I think actually the government officially declared recession in February. The numbers officially reported recession, but who knows. Anyway, point of the matter here is it really shouldn't surprise anybody looking at this chart that, prices need to come down a bit. And so that's basically what's happened here in the short term. The weird thing is Brian and his crazy celestial events, we got another one coming up here the end of June, beginning of July. So strap on your seatbelts, everybody. We got another one coming here. I was squawking for a while about I was one. Here was the April one. How the hell was this June one? And then we got one more way out in November, and this one's supposed to be the big ugly one. So we'll see how that goes. It's interesting how I did little sort of time studies here of rallies, because I noticed this happening quite a bit. Sort of 85 bars. Maybe we're at 85 bars. I wonder where we are now. What'd that top out? 52. Oh, actually, that's not even off the bottom. I'm just talking out my butt here now. Okay, so a little bit of chatter there. Stock market. I mean, everybody should look at this image and go, wow, big surprise. How deep do we go? Ironically enough, I would still, because, trend actually is up, I would actually expect some sort of counter-trend rally. Probably we should expect like 38.2s. Good old Ray Burchett to show some sort of support here. Where's that? Oh yeah, that's all the way down here against these lows. There could be a bit more trouble, but interesting how 30 SMA here is trying desperately to hold the market up. My hunch would be that we would see some sort of counter trend rally here, but who knows? I definitely don't have a trade here. Okay, I did see. Is this the Q&A document for the additional questions, or was this the whole one? Yeah, I think this is the whole document. Yeah, this looks like it's the whole document, so I don't know whether... Oh, was it say off topics here? I'm not quite sure what I'm looking at here. So, off topic questions. I guess we ran out of time. Is it somewhere down here? No, I don't know why. Is this the right document, Kevin? I guess you're here. This looks like the in-class one. Is any level oneers here who has the additional? Hello, boo hoo ho ho 007. Does anybody have the additional document? Did you just post it here, Kevin? Is that what you're talking? Hey, there we go. What's this? Copy, paste, bang. All right, here we go. Brian, oh boy, they are in bold. Here we go. You always randomly say, buy Bitcoin super fast, almost subliminally, then keep going with your conversations. That's supposed to be that subliminal message throughout your public in BCS. Is this because you think Bitcoin will be an important future financial asset to have? Thoughts? Yeah, I mean, this is a contentious conversation. Some people have Bitcoin moon. Some people, Bitcoin's going to go out of business. My opinion, that's all it is, just my opinion, is I believe Bitcoin is trying to be sort of the internet's money as email was sort of the internet's solution to snail mail. I believe there's enough space for multiple players. So different cryptocurrencies and really the worst part about it is I don't even think the word currency should even be used in this conversation. It should never include the word coin. Because those words totally what's the word I'm looking for? The connotations or whatever. That just completely derail someone's thinking, right? Like Bitcoin is a permissionless, decentralized ledger validated through the process of mining. And what I've seen in the history of Bitcoin is that whenever we get down into areas where the network could potentially get into trouble because of things like 51% attacks, the price of Bitcoin stabilizes nicely and then starts to rally. Even now I think we're 50% above that magic number. So, in my opinion, Bitcoin could actually go down for the next 2 or 3 years at a 10-15% annual rate, and we'd still be above the cost of production, in my opinion. So what often happens with these commodities is they very rarely trade at or below cost of production. They usually trade at a premium. So on balance, if I believe that there is a rising demand, which I believe that Bitcoin and these cryptocurrencies are in essence the internet solution to money, if there is a future in that, which I think there is, and I believe that there's a robust enough industry that can both support and justify the existence of these cryptocurrencies. And I see that infrastructure building, not diminishing. It's growing. It's getting bigger and bigger every day. Then that to me says growth. And really, when I say things like buy Bitcoin, what I've told you repeatedly is if the price does dump at or below cost of production, well, I think you're buying value. And in this world where it's very, very difficult to figure out what the hell value is, that, yeah, on balance, I don't mind that at all. Now, remember, a lot of fundamental analysts, all you level oneers, you should have remembered this. They might have a value identified in an asset, but they might have to sit on that asset as it's undervalued for a long period of time until the market believes that it's of value again and starts assigning a premium to it. And that's, of course, when the premium is injected, that's when the fundamentalist gets paid. So, my point when I say things like this is that if the stock market rolls over and growth itself is seriously brought into question, then equity itself has a very difficult time because equity is a growth engine. So if we're not growing, how do you justify stock prices? And a lot of high growth companies that have hugely high market valuations, they are entirely based on the premise that we will keep growing. And if we don't, look out below. And the problem is you can't really figure out what zero is. A company that's heavily indebted or has maybe no assets. And for one reason or another, their industry is made obsolete. That can be just a long, slow grind of death. So if I understand the cost of production model on Bitcoin, ironically enough, I think it's a rise-only market. The key here is not to get sucked into investing, quote unquote, your Bitcoin substantially higher than that cost of production level. And if you do, well, then you're taking a chance that you may not have bought value. You may have to sit on your asset underwater like anybody who bought, say, above $10,000. Back in the teens. Now we can say back in the teens. Remember the teens? So I hope that helps answer that question. And then also, too, add insult to injury. What is, like if you are pricing your Bitcoins in these things called dollars or in euros or in yen or in any of these fiat currencies, what the hell is one of these dollars, euro, yen actually worth? Might not be worth anything. I mean, the sad part about it, I teach all students this. I used to say this year in, year out. Technically, the countries of the Western world are bankrupt. Well, it's common knowledge. Everybody knows that. I mean, the damn politicians for 20, 30 years have been saying, we are mortgaging our children's future. Well, guess what? We're now in the children's future that we mortgaged 20, 30 years ago. And warned about mortgaging our children's future. Well, yeah, this is the world that we've all inherited. Thank you very much, baby boomers. They mortgaged our future, and here we are in the future where money and assets are basically worthless. Money, government bonds, those mortgages that our baby boomer brethren straddled us with, and they continue doing it to today. And, it's almost getting laughable now because what ends up happening with anybody who's in debt is you have to borrow more money to sustain that lifestyle that really you never had any business living to begin with. And then, the bankers, of course, they want their interest. And what's fascinating, of course, is the bankers want their interest. They control the United States of America. So if there's any excess money on top of that, where does that money get directed towards? I find it fascinating that, technically the United States is bankrupt. I mean, it's laughable. The monthly budget deficits, in hundreds of billions of dollars. This is a joke. But the only way that they can get away with it is that whatever money that they have, they go and plunk it all into their military, and they got the biggest, baddest dick around. And if anybody wants to fuck with them, get ready. I mean, that's the brutal world that we live in. And of course, the bankers love that, right? They got it made in the shade. Joe Sixpack, what happened? I mean, you ask yourself why there's all this social disorder right now. I mean, is it... I actually... well, this is opening up a can of worms, but it'd be interesting to get some debate on this. If we actually look at it from the police's perspective, I put out a tweet here recently that the police and all of these social programs that are supposed to go towards servicing our society, they're completely stripped. They're completely gutted. Like the actual police officers themselves, their training is laughable. Why? Because these government agencies have no money to pay for them to get trained appropriately. And, why do we have no social programs? Because all these programs are gutted to make sure the bankers, of course, have their interest payments. So, the writing has been on the wall since basically the collapse of the Soviet Union. You could see this coming. You could argue half of the reason of quote-unquote globalization. I remember, I lived through it. They called it downsizing, where basically all the companies and people had good paying union jobs here in North America. The companies basically fired them, moved their operations over to Asia and down to South America, right? Globalization. Downsizing, they called it right-sizing. I remember IBM specifically, they had their big marketing campaign was right-sizing. Fuck you. So, the writing's been on the wall for 20 years now. It's so blatantly obvious. It's finally hit a sort of a tipping point. The question ultimately is, does all this social unrest actually translate into change? Frankly speaking, I don't think we can change this. Do you see the bankers? Are they saying, oh, you know what? Don't worry about all these loans. We'll forget about them. Powell in his speech on that Fed announcement, he explicitly said, look we can lend you all the money we want. The banks are in a great position. You want to come and borrow money? Oh, we've got all of these awesome programs for you. But all that's doing is just going into more debt. Does that solve the problem? Not really. So my feeling here, for whatever it's worth, is that the emperor has no clothes on. At some point, our society will tip over and we will go, oh, gee whiz, the emperor doesn't have any clothes on. That could be a very, very ugly period for our Western society. That could be really ugly. Civil war, tough economic times, mass unemployment. It could be really, really ugly. At some point, we will have to face the music. Who knows when? My feeling is that the baby boomers were successful in kicking the can down the road. But that's all they've done. Nobody's actually solved any problems here. All they're doing is they just keep kicking the can down the road. And that's sort of this whole conversation, Japanification. Nobody's actually changed anything in Japan. And all the bankers and stuff there and the government now, they're all still sitting on the bad debt. And they will. They'll just ride it out to maturity. But none of the problems of the lack of growth have been solved. And what's weird is, as sort of, the baby boomers went through their demographic cycle, right? A lot of the problems in the Japanese demographic situation were sort of exported, and the American market was a big export market, and it saved a lot of them in that regard. And then it became sort of a situation where every single country was just dumping product into the U.S. market. At some point, this situation has to change. It just does. So, bring this whole conversation full circle. It's never a really good idea to be 100% invested in anything, right? You ask the people, think about it. If you lived in Germany in 1910, Germany was a pretty prosperous country. It was a global superpower. If you had been like a postal worker or something in like 1905 in, I don't know, any city in Germany, or school teacher, or patent clerk. um, these people, they saved their money, they thought they had pensions, right? And then all hell breaks loose. 20 years goes by, and even not even 20 years, like, well, 15 years goes by, and the whole world is completely different. If anything, it's a really good example. You can't depend on anything in this world. So, what does a person do to try and deal with this total and complete uncertainty? There's really only one answer and especially if you think like you're a big, $1 billion hedge fund manager. I mean, there's really only one way to deal with this problem, and that is this thing called the efficient frontier. And this was a big part of our conversation here with students today, where there's actually a Nobel Prize-winning economist who mathematically proved that if you don't keep all your eggs in one basket, you do better than if you have all your eggs in one basket. And because they mathematically proved it, they won the Nobel Prize in economics. So what a surprise. But really, this is the only way that you can really survive these kind of insane uncertainties in the world. For all intents and purposes, after the end of the Second World War, it's a pretty easy bet. You just bet on whoever the winners of the war are. So, from post 1945, Russia did pretty well. And really, for a good, 40 years or so, they just lived off the spoils of war. I think you can make an argument, if you invested in the winners of the Second World War, on balance, you did pretty well. Obviously, the United States, leader of the Cold War, against the Reds, was the biggest beneficiary. Anyway, the point here is that I think it's been a pretty easy one-way bet in the United States of America for not only following the end of the Second World War, always bet on the winner, winner won, enough said, and then the Cold War, same thing there. America basically won the Cold War, and I watched in the late 1990s, like I said, all the trade unions, all the socialist movements, all that, everything started to unwind. All the companies, all the capitalists, they just started to milk the shit out of the workers. They didn't necessarily cut wages, they just never gave workers raises. And then, of course, the milking of society, whether it be through the dot-com boom, that took a ton of wealth out of the baby boomers and transferred it to, the 1%. Then the housing market and the commodities boom of the Bush years, exact same thing. And we've got to a point now where basically the 1% has literally sucked the life out of the U.S. economy. So much so, and I was actually really disappointed in this. If you, I like to use these free services like FinViz, for example. When I started my funny crypto adventure with Bitcoin with what's that guy's name? Julian. Years ago. Julian worked for Boeing, and of course a big blue chip company, solid, beautiful balance sheet. The balance sheet was absolutely pristine. And literally over the past, now, Julian and I have been working together for 5 years. They have literally gone and just absolutely cannibalized this company as just one example of what I would have considered a very big blue chip, solid U.S. Blue chip company. This company is technically bankrupt. It's quite shocking. It's very difficult for me to even consider investing in companies like this. Look at this. I mean, look at these numbers, $3.5 billion in losses. Very, very disappointing. I got to tell you, quite surprised when I pulled up the fundamentals on this company. And, Julian will say, they approve share buybacks and all this, even though they keep ramping up the debt, more debt, more debt, more debt, that when they approve whatever capital that the company goes and borrows, they actually go and buy the stock back in the marketplace to bid the stock price up, so that the insiders, of course, all the options go up in value, they all get rich, cash out, and then you're left with like a shell of a company. Quite shocking. Absolutely shocking. And this is a scary tinfoil hat kind of conversation. But there's Boeing. What does Boeing make that the United States of America government could solve this problem very quickly? And sadly, I think actually that's exactly what's going to happen here. Oh goodness. Crazy world we live in. Brian the Cynic. Okay, so I sure hope I answered that question. Why do I say buy Bitcoin? Well, because, first and foremost, I like diversification. That's the efficient frontier. Make sure you have all your eggs spread out. If you can buy Bitcoins at or below value, then I think it's a safe place to hide. If the whole market just absolutely collapses here, and frankly speaking, that's not out of the question, given the year and what I actually expect to happen in November. Ironically enough, April was just the opening act of this year. November is the main event. So, all right, sure hope that helps answer that question. Can you explain more on market breadth? Market, I guess that, actually the dashboard is really the easiest way to think about market breadth. Think of, if you had looked at the entire stock market as this 1, 2, 3, 4, 5, 6, 7, 8, 9 stocks. Like the whole damn stock market is 9 stocks. So if we were looking at the stock market at this medium picture right here, we would say that every single stock in the market is up. So that's a pretty strong signal. The problem we have to understand, though, is as investors, what does this actually tell us if every single stock is up here? It actually says that, well, a hell of a lot of people have been buying to get every single stock all green. But then the question you have to ask yourself, well, is if everything is all green, are there going to be more buyers? Where can we go from here, right? Think of RSI, Williams percentage R, any price oscillator. You can only stretch the rubber band so far. So if you have a situation where every single issue is up, 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 then sadly, the only direction we can go is down. So there's a good example where if everything is up, 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 very, very, very strong, you as a contrarian have to ask yourself, well, maybe that's as high as we go. So this histogram, if we were going to do a breadth reading, we would say we have 9 out of 9 bullish, or basically everything is bullish. And if you did a bullish percentage, 9 out of 9, it would probably come back 100% bull, which as a contrarian is a bit of a warning sign. Now, you can't really see this just on this day, but if you took this bullish percentage reading and then plotted it as a line chart and every single day updated the reading and then did things like moving averages off of those readings, that's basically what this image is. So, if you see this above 70, 80, just think of any overbought, oversold indicator, it means that a heck of a lot of the market has been bought and it is up. But maybe the market's running out of buyers. And, if we think rubber band, if we are all the way up, we can't really go any higher. Everything's already up. So what ends up happening is we sort of slowly roll over, and you can even see here, middle of last week, I had warned when the market was right up top here, we looked at this image and every single thing, not only on a medium-term basis, but on a short-term basis, every single column here was up, and it was up big, and that's a major warning sign. that everything is overbought. And just think of the rubber band. If everything, breadth, if everything is moving up, well, then that probably means that a lot of people have bought to get everything moving up, and maybe the market's actually starting to run out of buyers. So an easy way for you to sort of see this, this is TRI's tool set, and frankly speaking, this thing is gonna just this kind of shit takes us next level. So super stoked to see that. But like our school program, really simple tools that we teach in the program. The advanced decline line is in essence just simply asking how many stocks on the New York stock exchange are going up versus how many stocks on the stock exchange are going down. And it's just a ratio. And, when these ratios get to extreme levels, it's probably a warning sign that, hey, maybe things have gone a little too far. So you can see this extreme warning sign that was right there. Market had to clean itself up. Things just got a little ahead of themselves. Then we went zipping back up here. Market got super bullish. We had to clean up a bit. And I remember we went through this period where Russell 2000 and stuff actually started to show signs of breaking down. The broader market, the breadth wasn't very happy. Then the broader market breadth started to turn back up, and the stock market, like indexes, started to go apeshit. And really now I think you could say off of this study right here that we don't necessarily have any M's yet. And if anything, I do like the idea that the stock indexes, we have location, we have indicator confirmation. Now we're looking for like a nice polite M or something to short. I could see that the breadth indicator has to come up and M out as well to give us that confirmation that indeed the entire market is rolling over. So also too, another way to think about breadth is I like to ask, what is the small caps doing relative to the big caps? So this is a relationship between the entire small cap universe and the big cap universe, or basically the Russell 2000 stock index versus the Dow Jones Industrial Average. So in a healthy big bull market, everything's moving up. Breadth is moving up, right? This Russell 2000, that's 2,000 stocks. We'd actually like to see it outperforming this small basket of 30 big blue chip stocks. And so we had nice stock market rallies through here. In essence, W's in this. The breadth of the indicator, the market was strong. Like I said, we had a little bit of a sign of failure there about a month ago. Then we cleaned up and things pushed to new highs. But the concern here now, and you can see, of course, we've got a big M here. But the concern now I have, and Kevin actually is great at this, is he's actually identified that there's a bearish divergence here in the momentum indicator. So not only are we getting an M here in the Russell 2000, or the broader market is breaking down, relative to the big cap stocks, but it's also breaking down on momentum too, which is very concerning. It's going to be a bumpy ride here, folks, no doubt about it. So I hope that helps answer that question. And by all means, we can talk lots about market breadth, through the daily briefs on a regular basis. Just follow the DI. Whoever asked this question, let's just watch the DI closely together. It's an excellent tool. All right, next one, 5:30. These are, I don't know whether this is going from, I guess this is going from most recent. So I guess that's it for recent questions. Did I ask these, or did I answer these questions before? What is share consolidation? And why consolidation is positive for investment decision? It is just a consolidation of few shares in one and doesn't affect the price. While split is normally considered as a positive thing as it makes stocks more liquid. Brian in his lecture says consolidation is positive signal and split is negative. I didn't manage to get why. This feels like deja vu. Didn't I? I think I did answer this, didn't I? I mean, I can go through another answer, I suppose. I mean, the point here is, and I think I walked through some VCIM examples. Um, if you're thinking about investing in new ideas, ideally you would really like the share structure to be solid. So that's really the basis of where we come at this. Is we're looking for structurally solid names, not sort of what business are they in, what's their product. Um, what we're really asking is what's the vehicle look like? We go kick the tires. Maybe Richard Petty's a great stock car driver, but if he's driving a Pinto, what are the odds of him winning the race? And that's an old reference. So any of you even remember Richard Petty? I was looking at a documentary of the Superbird car. That was his favorite race car. Is the Superbird. Anyway, that's forever ago. So, really. If I want to invest in good structural names, then I definitely want to look for very low share counts. Now, you can sometimes get too low, right? I do notice, rebonds, our buddy good old Tim Draper, especially U.S. listed companies that are flirting with that NASDAQ versus bulletin board listing. That's always contentious in itself. But here in Canada, we have actually a really solid way of screening these names, and we had really bad scandal in Canada 20, 30 years ago. So as a result, all these companies have to sign everything off in blood. So it's a little bit more reliable trading information here in Canada. But in essence, you are correct that as companies are going along, if you are an existing shareholder, you would ideally like to hear that there is so much demand for your company stock that the share price keeps going up, that the board of directors, trying to keep the share price relatively low so that everybody can participate, they've decided to split the stock so that the share price is back in a more purchasable area. And I remember back in the 90s, like stocks like Compaq Computer, it kept splitting over and over and over and over. And of course, shareholders loved that. I remember Dell when it was all the rage. It just kept splitting over and over and over. I'm actually a bit surprised. Companies like Google and Amazon and stuff haven't split their stocks as much as I've seen in years gone by. But they've actually very quietly just gone and done financings. So they've quietly just continued to issue more stock rather than splitting the existing stock. So really the question here is, are you an existing shareholder or are you a prospective shareholder? So as a existing shareholder, the last thing in the world you want to hear is that the company is going to roll the stock back. You do not want to hear that if you own the stock, because in essence, if you owned 1,000 shares after the rollback, a 10-for-1 rollback, boom, now you own 100 shares. Merry Christmas. And the stock has to be 10 times higher just for you to be at the same level you were before the rollback. And quite often, stocks will jump up on the rollback, but they won't jump up that full price. And quite often, they'll jump up a bit, and people will just start hitting the bid and just slamming it back down. So, most important to understand, the question here is not about existing shareholders. I am a prospective shareholder. If I have a bunch of money and I'm thinking about investing in my money into the marketplace, then looking at companies that just consolidated their stock, hopefully you can see that should be a sign of, wow, the old shareholders, they're toast. If I come in on this thing now, not only am I getting a bigger chunk of the company because they rolled the stock back, but all those old shareholders, they're all toast now. And I'm basically coming into, in essence, a brand new venture. So, for when I was a VSE trader, I was a broker there forever. But I used to work with one of the floor traders. He taught me this model, and this is an approach more based off of what professional stock traders want to see in the characteristics, the behavior of these vehicles to identify that actually they're buying value. And keep in mind, buying value in venture capital. Has anybody bought a shitcoin lately? How's that gone? What the hell is value in shitcoins? They're worthless. I hate to say it, a lot of venture capital stock is worthless too. So maybe it behooves us to try and figure out how the hell do you figure out value in these basically, most venture capital stock promoters, we used to call them paper hangers. I don't know whether you've ever heard that expression before. For our level 1 program, we have a colorful story that we tell students about Jay Gould. He was basically a paper hanger from back in the 19th century. And man, the amount of money he scammed from people was just staggering. Point being that almost all stock investments are to a certain degree a fugazi. You have to believe. Right now, like things like brick and mortar retail, people are losing the belief in them, and those companies are literally, their stocks are being worthless. 20, 30 years ago, if somebody said you're investing in Macy's, that's a good quality name. J.C. Penney, that's a good quality retail name. I mean, hell, growing up in Toronto when I was really small, there were 2 major department stores everybody shopped at, Simpsons and Sears. And they were the cornerstones of basically all Christmas shopping. Everybody shopped at Simpsons or Sears. Both of those names are gone now. Right? I mean, Sears doesn't even exist in Canada anymore, I don't think. So, go figure. Okay. So, were there any other questions that I should... Okay, this looks like it's from here, right? Brian, really like the insight into the falling phase. What is the best possible way to diversify within crypto land? You know how many people we had through that whole last cycle who literally drove themselves crazy trying to figure out how to diversify within crypto? This is the saddest part that I find about the crypto story is I would make the argument that they're all basically the same asset class. And it's just really a question of going story to story to story to story to try and figure out what fundamental value is in any particular story. But they're all basically under that commodity category in my eyes. So really the question is, I used to have customers when I was a broker, and it used to drive me fucking insane. I had financial management advisor and all those kind of funny titles, fellow of the Canadian Securities Institute. I mean, I was supposed to be like financial planning, right? And actually for our level 1 students, right, this is, basically a core component of how I used to run my business. What is appropriate risk? And all you level 1ers, right, it says right here, 3 months cost of living emergency funds. That is completely separate of any kind of crypto trading plans or anything. Don't put yourself into a position where you can't come back and play the game tomorrow. So, in this kind of world, it used to drive me crazy because, of course, here in Canada and BC, mining commodities, gold and silver, copper, cobalt, right, whatever. But I used to sit down with people and they would say with a totally straight face, I'd say, well, are you diversified? And they'd say, oh yeah, I'm diversified. I own gold and silver. It just drives you crazy. So, your question about being diversified in crypto is exactly the same thing. It's identical. frankly speaking, you buy any cryptocurrency asset, you are basically buying, in my opinion, that same asset class. And there's a lot of people that, of course, are promoting things like stable coins, and I think there was one. I think we gave him some money a while ago. I think it's still there. I have no idea, but there are coins. I think that you can buy gold and stuff with. I think we got like some money sitting on one of those. So there is that to consider, but on balance, I would probably say for efficient frontier kind of thinking. Was it this window? I think it was this one that I had on here. Yeah. It would be sort of like, where do I fall in this category? And crypto would be one of these risk points. And I would put it in the same category with all the commodities. So, your gold, your oil, your, pork bellies. They're all in basically that category. Yeah, I mean, the one thing I do like about Bitcoin is because of the algorithm. I do like the fact that it has a built-in rise component to it. I think to a certain degree that pretty much offsets the depreciation of the currency, the base currency. Like, I get the impression that was sort of Satoshi's sort of goal, was to try and offset the expected depreciation of the US dollar through dilution. So I do like it from that perspective. And then also too, I really like Bitcoin. And I don't, it doesn't necessarily have to be Bitcoin. I mean, gee whiz, I think TRI probably owns like hundreds of different cryptocurrencies. I mean, literally. We got, and I think thanks to Julian, I think our biggest core holding now is Ethereum. I never wanted to be an Ethereum bull, but I guess I am now. So, it's a good idea to have a nice diversified basket. And what I would highly encourage you to do is get to know the story. Why is your cryptocurrency in existence? And a lot of these stories have really cool development paths, and I think each and every one of them could have a very unique use case scenario, and you never know which one's going to go 10x, 100x. You just don't know. I remember through that Bitcoin run up there, somebody just for kicks was like, "Hey Brian, I'm going to go pick up a whack of this Pivx. Do you know what it is?" I haven't got a clue. And then he comes back to me a week or two later, or maybe a month or two later, for the ICO, and he's like, "Oh yeah, I just took 100 G's out of the market on that Pivx." Oh, okay. I mean, that was obviously through the insanity of that. But, I maybe a good dovetail to wind this up here, because I'm getting the feeling that... did I answer these questions, or are these new questions, Kevin? Should I go into these? I'm lost. I have no idea what I'm doing here. Oh well. I don't know. Kevin, are you? Yeah, you did. Are you still here, Kevin? Are there any level 1ers here? Can somebody help me? Hey, there's somebody. Colleen, what do you think I should do here? When in doubt, lean on Colleen. Seems to work. And get the rocker salute to start your day. Crypto! What does that mean, though? I mean, here's a problem with, I suppose we probably ought to do like a Bitcoin review here. And I keep saying the same message probably now for like a week or two. I don't think really that much has changed here. Bitcoin, there you go. So there's your Bitcoin. Merry Christmas. Still think we are bow tying. Yeah, really interesting battle point here. Clearly, if we lose this, then we're probably in trouble. Probably going to have to come up against this trend line here. But this feels very consolidatively. So it's not a lot for me to get excited about. I did go and buy, actually I bought like, it was so cool actually, because we got all these multiple plans all zooming all over the place. So I've got a plan for TRI. Went and bought put option on Bitcoin for that, and then Andrew, Shane, and I, we've got a fun little plan. So we went and bought puts on that account. So I guess you could say I am officially locking in up top here. If I understand correctly, I think Julian's actually got a pretty big fat hedge on now too on his Ethereum exposure. And actually, it's kind of cool. I did this sort of image the other day. I mean, everybody should look at this chart and go, gee whiz, I guess, this isn't like it's not without risk. I mean, look at this move. I mean, that's basically straight up. And I was joking with someone earlier. I really like the idea of buying Bitcoins against like this candle body lows right down there. And I think this tail right in here. There's a bunch of trap bears right in that tail right down in there. I would love it. I was even saying this on the site earlier today. I was kind of like, if somebody just sort of said, hey, Brian, I'm thinking about buying some Bitcoins. Where should I throw in a bit? I always talk about these candle body highs and lows as awesome trade location. So I would definitely be sort of like, just right off the bat, that level right there jumps out at me. Then I go things like, let's be fancy here. Reload zones. Let's see where we are here. Ooh, how low does that? How low do you go? All right, and we'll go boom. Yeah, all right. So now you can see the picture starting to coalesce. There's 78.6 sitting right there. So that tail, right? That tail right there to me says, if we dip down into there, there's probably a bunch of guys who did short this are just going, oh, for God's sakes, I'm dying 1,000 deaths. Let me out. Let me out. So that would be a level I would be really interested in right here. I mean, let's call a spade a spade. And what are you supposed to think if you ever see the market smiling at you? So that's a big fat smile. It's there. It's interesting too is, because this is so steep, how the hell do you draw trend lines? So, I mean, that's something that would jump out at me. But clearly that's not in play anymore. So then I have to sort of walk my way up here. So we can go here. And actually, I think that's the lowest low there. Right? 56, 78, 20, 56, 70. No, 78, 56, 78, 58. Yeah, okay, so that's there. And the next one is there. So that'll probably come into play. I bet you that's like 38.2 right in there. And the next one is here. That's an interesting one. I was drawing that earlier today and wondering whether I'd just go straight off of there. But nonetheless, then we go there, and then we go there. All right. So actually, I think we can start seeing a window now here. And so this is actually a really good example of why I don't like taking trades on trendline tags. So you can see how the market came down here. It really flirted, probably got a couple of people to FOMO short there, and then just tore their hearts out. So you can see, boom, we came back down. Then we lost it. We actually start working it from the other side. That's interesting. Then fail. So, with this failure, actually, we can start drawing that line. So it seems to me that there, if you were going to say what is sort of realistic price action over the next, probably few days, it's probably somewhere in all this. All right, like so, somewhere through all that. And I do remember the other day I had sort of mentioned this, that these two candles, I think, really sort of define our range here in the short term. If we could accept back above this level, then I think we can explore and probably try and go and take out that high up there. Wicks and tails like to be eaten. There's probably some trap bears there that would love it to get released. And then conversely, if this thing starts crapping out here and we lose these lows, then we're probably, seriously in trouble. It really looks to me, though, I would be surprised if there wasn't some serious play at that level right there. So that's going to be like horizontal support right into that tail. You can see that tail. There's a bunch of trap bears there. So and that might also be like A, B, C, D, right into that level there. So, and then also too, like this trend line, this is probably going to line up with these lows, right? So in a weird sort of way, you can almost sort of see this. There's support, there's resistance, and if we do lose that, there's more support, there's resistance, right? So, kind of like how we sort of chopped our way up, my hunch is we're probably going to chop our way down. You can see how it's going to be very zigzaggy. I would be surprised if this thing really shit the bed here. That's just me, but I would be surprised. I wonder too, I'm also, conjecturing, sort of thinking in my brain, what if maybe this July pivot is actually the high, right? And there's like April conjunct was a low, June, July pivot was a high, and then that November becomes a low. That could very easily be the case too. I don't know. I'm a student of the market just like all you guys. So, and this is interesting because when a site member even today was kind of like, well, Brian, what happens if you look at this from a 3-day perspective? And doesn't really change anything here. I don't really have any reversal bars to work with there. You can see the double top's kind of sloppy. Key support still looks, reasonable in this area here. But I did do... I wonder where it was. It's kind of fun. But I don't know what I did with that. Maybe I got rid of it. That would suck. Anyway, I was chatting with another site member earlier today doing a 3-day chart. Maybe it's over. Here it is. Yay. This kind of jumped out at me. I thought this was kind of interesting. I don't know whether it's valid or not, but... I looked at this range right here and I noticed that there seems to be some sort of pattern here, especially this pivot low to this pivot high. And what was really interesting about this, sort of studying this pattern, was that on a 3-day chart, this made a really interesting doji right off the 10,000 level. You can see, it's a very interesting doji there. So, I wondered, because that doji, I think, sort of defines, it was like at this point we were, we're above 10,000, 10, 14,000, whatever. And then we got to this point here, and you can see that the market, it had very dramatic change of heart here, very different market state here. So, I just sort of like molded over, and I found that this sure looks, and I think I've said this publicly, but this sure looks like a big honking head and shoulders. I thought it was interesting too. I did just a cute little trend angle from that doji event body off of this high to that high, and it was about 2 degrees. And then I just did another 2-degree angle going off this direction, sort of thinking like that's a bit of the middle of a big diamond here. And I thought that was interesting that rally peak was right into that level, and then we backed away. I don't know if it's meaningful or not. But, just sort of looking at this, I thought this was really interesting, that if I took a sort of a study from that doji to here, there was a reason why I did this number of bars. I can't remember what it was. I guess what I found was I noticed that this peak to this trough, it feels like this was some sort of big apex event here, right? Come on, you. From there to there. And if that's sort of like the middle of the fractal, think like left shoulder, head, right shoulder, then it seemed to me that this, from this peak to this trough, that to me seems relevant. Like it's like the axis of the seesaw in a way. So I took sort of a full study of that, 10 bars, broke that in half, and it actually gives sort of a mid pivot here, which I kind of like because I know this is hard to see, but in essence, these are almost like exact mirror opposite images of each other. It's just obviously the price difference makes that hard to see. So I thought that kind of jumped out at me too. So, if I'm sort of thinking that this is the sort of left-hand side and this is the right-hand side, then I start sort of coming up with this sort of parabola of the time. And what I noticed here was when I kept sort of doing the same study over and over and over, I got this funny behavioral pattern where, like over here, we're in a very strongly trending market state, and then almost just about at the middle of the cycle, it basically stops. And basically, we reverse. Big fat M, no more bull, you start correcting. And then in this one, which is kind of interesting, we jumped up quickly, spent a good portion of the time trending down, then just about the middle, we sort of stopped. And really, we finished the reporting period almost exactly the same level, which I thought was kind of weird. This one here, kind of think that doji kind of thing, opened up, tanked, and then about halfway through the study, the move sort of finished, and we just went sideways. Same thing here. Started this move, big move for about half of the study, and then, not exactly halfway. This is sort of about here, but in essence, we just sort of stopped. And same thing here. Opened up about, straight line direction. Interesting here, though. We did have a pretty smart counter trend rally. So I don't know how to interpret that, but, here we are on this one. I noticed we opened up out of the gate. Had a big dump right out of the gate, but interesting how a good portion of this period was spent going one directional. Now we're about halfway through here. I'm just wondering whether maybe we could spend, a good half cycle here just sort of backfilling. That's kind of what I'm thinking here. I don't know. It's crazy. Something, this is what I do for fun. So, call me crazy. Along those head and shoulders thinking, I thought this was fascinating. Remember I said just a moment ago, really interested in candle body lows. So you can see I was already thinking that earlier. There's that trapped, this is off the 3-day chart. You can see that huge tail, all those trapped bears, because keep in mind at one point this was down. They would love nothing more than to get released. And I thought, like I said, I think I did this a moment ago. When I do the reload zone off of that, and I think, if I'm not mistaken, 88.6 lines up perfectly, and that's good old leprechaun level. Look at that, eh? Ian, see you in my sleep. I don't know whether we actually, I could see kind of like what Kevin did here last year. Actually, not. Was that last year? No, that was. What was that? 3 or 4 months ago, and it's like last year, 5 years ago. But Kevin pulled one out of his butt because he's such an awesome dude. For whatever it's worth, Kevin affectionately on the site is, just in case you run into him on the street, you better know how to appropriately address him. Because I'll tell you, if you don't, he'll bite your head off. So there's good old Kavarkanator, officially the Duke of Berkey. I think he's also the Duke of Roswell too, so you can see his territory is expanding. But damn fine gentleman altogether. But good old Kavarkanator, and I'm just having fun with him. Love you, babe. He identified this 88.6 off of this entire range, and he was a buyer in through here. What a dog, eh? So I could see that kind of scenario where, it's some sort of insane zing-zing right? And you don't get that big of a window here, right? So make damn sure you have your open orders working. What I would expect, again, sort of head and shoulders kind of thinking, what I would expect, and what I'm hoping for, maybe that's what I should say, um, is a nice move down into, and actually it's fascinating because if you look at this level, gee whiz, who's this? All right, if we go back to reload zone, that's Mountain Man, right? Mountain Man, that would be perfect, right? If we had a nice solid tag of Mountain and just reverse, that would be absolutely textbook. And we also have an OGer on the side who really loves inverted head and shoulders. And he would prefer not to see this shoulder breached over here. So even, something as shallow as 50%. Would be perfectly acceptable. I do like the Mountain Man kind of idea coming in against all these tails, releasing these trap bears. But don't be surprised if there's some sort of insano nutso candle, kind of like this, that takes us right down into this candle body level, 88.6, release these trap bears. And, to that sort of point that this person asked right at the beginning, why do you say this? Because frankly speaking, I don't know what value is in this world right now. But I do like the idea, call me crazy, that there is value at or below the cost of production to produce a Bitcoin. That is a place where I can pretty much feel as though, okay, I'm not walking into a trap. I do find it fascinating. Everybody see on your screen that says 4,800. Bitcoin has a history of lulling people into believing it's a certain value and then just knocking it in half. Bitcoin loves to do that. I suppose you could argue here 9 all the way down to 4. That was an example of that. I remember a summer or two ago, this was so tragic. Everybody believed Bitcoin was worth $6,000 and bang, down into 3. So Bitcoin loves to do this. I've seen it repeatedly. So, and the point that I would make is, yeah, I've gone and I have some puts on the books. I think that's not a bad idea given what's going on in this world. Buying some puts on the stock market is not a bad idea at all. Buying a put on risk on is, in my opinion, not a bad idea at all. Ironically enough, I actually look at the gold stocks and the gold sector, and I actually see that the gold stocks, I would not have a problem buying a put on the gold stocks. Now, wow, is that ever a controversial statement? But I follow the gold stocks closely. Here is the gold stock index. You tell me, does that look like any kind of pattern this Beamish guy might be interested in? You all saw the inverted head and shoulders that I was painting elsewhere. A regular head and shoulders should have me just as interested. What do you think? Does this look like it has trouble written all over it? Sure looks like it to me. So, caveat emptor. Do as you please. It's not a risk I want to take. So, that's the bigger picture with regard to crypto. It's not really the sexiest image. And what's a little bit concerning is I actually think that Bitcoin looks better than some of the others. I like to just follow the triumvirate here on a regular basis. The 3, Bitcoin, Ethereum, and Litecoin. That's just sort of a simple, how are they doing? As I had said there, we actually have an inside bar sell signal there from today's price action. It's Sunday, though, so I don't know how much we can read into it. But, probably I'm going to head off to Liam here probably pretty soon. But, over the course of Sunday, watch how this acts. And if you start drilling down to lower time frames and we start actually making, because we now have one high, if we start looking down at lower time frames and you see 2 highs and 3 highs, you can bet your bottom dollar Brian's going to be thinking bearish bots. I I mean, Bitcoin doesn't look great, don't get me wrong. But of the three, when I looked at Ethereum, you can see the big happy face there. And yeah, it's confirmed. There's the bull-bear battle lines I was talking about on Bitcoin. You can see they rallied it right up to the top. Here, can we break this out? And now they've gone and put in an inside bar failure. So that's actually a little bit of a sell signal right there on the loss of that low. So same thing like Bitcoin. If you start seeing three higher lows, you can see the AB equals CD starting to form. And what's interesting about this, I showed this to one of our OGs on the site who's a big harmonics fan. And he's like, holy sheep shit. And this is exactly the best way I like to teach students how to use these harmonics. Is ideally you want a harmonic setup to set itself up. In this case, this is a bearish crab, if I'm not mistaken. Just for posterity, let's show you what that kind of looks like. Butterfly? I was thinking crab. Something like that. But it could be butterfly too. Yep, you're right. Probably more butterfly-ish than crabbish. There's a 78.6. So there you go, right? It's always good to check. Got to make sure I get those terms correct or the harmonics Nazis will come after me. Yeah, but pretty good, eh? So yeah, 78.6 counter trend rally would set up that butterfly, and 1.272 up to 1.618. 1.51, this is sort of one of these, are you going to be too much of a stickler? That's a tough one. I suppose you could look at different exchanges. You might have slightly different prices. But the point that I would just say here is this is a bearish harmonic. We're rallying into, kind of like what I was saying earlier before. If this is actually a bear, remember institutions are not allowed to sell this. But if they did want to sell, where are they going to sell? Reload short zones. So they probably, bought back what they originally sold up top. And where are they going to look to reload? Well, they're going to look to reload back up against the top end of the range. So it shouldn't surprise us that we're seeing M's come in here. That shouldn't surprise anybody at all. Red boxes usually are selling zones. You want to try and time your purchases very finitely? Is that a word? I don't know. Finally, if I wanted to be a buyer of Ethereum right now, ironically enough, this is kind of the same conversation as Bitcoin. You can see where 78.6s are. Notice these nice railroad track lows. Somebody obviously really likes this level down in here. We could argue that there are some trapped bears down in these tails down in here that would love to get released. So you can kind of see the trade setting itself up somewhere dip down into this area. So we see how it goes. Interesting too. We actually do have an inside bar bearish failure there. So it's Sunday though. I don't know whether you want it. All right. So and actually you can even see one high, two highs, three highs, four highs, five highs. Clearly, this is a good example. Actually, it'd be good feedback for the YouTube audience. I haven't talked to you guys much today. What would I call all of these levels for you? Actually, in the school program, they'll be doing fibs this coming week. So you guys all in the school program will have a textbooky definition of these levels. But what's sort of the slang, the euphemism we would use to describe this zone here? Anyone? I don't know. How about even in the lounge? Any of you guys remember? Hey, there you go. Min duck vo. Hiya! Na 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 na. I thought that's what he said. Oh no. Is that... I am, oh no, I better not even go there. Anyway, so the point here is that we could probably even start drawing out bot levels for those aggressive traders. I suppose you could go off that high. It's personal discretion, but something like that. So we went 33. We did not go 66. And hello, bot levels are starting to form. There we go. What a surprise. So you can see how the market basically has set this trade up. So nice double top fail. I would call this like front running the bot, where you try and maybe try. I mean, the best place would be to try and get short off those candle body levels. So your big double top comes in, boom, throw your open order to short at 234.92, and call it 235, and you're going to risk against 239.54. So that's not bad. That's only about $5 worth of risk. Looking for 214.19. So, if she does fall apart, you can understand there is the trade. Yeah, it's pretty straightforward. And then same thing on Litecoin. Litecoin actually looks a little bit weaker than the rest of them. You can actually even argue this entire pattern is trying to M out here. What's interesting too is I think actually the original M top here never was broken. So this actual top here from a while ago is still working. Actually, I'm a little surprised. Anybody heard anything from out of Charlie these days? He's been awfully quiet. Inside bar failure there as well, so it doesn't surprise me. And probably if we drill down to the hourly chart, you can see the little sort of short-term setup working. So, the big three, I don't have anything to get super excited about. I suppose one could argue since this was a new high, we'd probably want, if we're thinking bullish, maybe, I suppose there is still this massive bot. You'd have to be risking down against these levels here. I got one low, two lows. Is that enough for a third low? I don't know. It's probably still a little bit early to draw bullish setups here. And I suppose Litecoin, maybe you can go 1, 2, 3. So if you start seeing momentum turns back up, break these. See, one thing I don't like about these charts is, if we were going to do LJs, like off a Litecoin or something like that, there's the trend line. So, yeah, that's a mess. I don't know. I think you're trying to force the issue here. What's this high? 49.99, and this high is 49.90. Okay, so I beg your pardon. This is still the high. Okay, well, it is there. It's probably nothing I'd be too interested in. But 1, 2, 3. We can get a nice momentum turn here out of our indicators. We might have something to work with. Let's see what we got here. So that is there. And actually, we had a really interesting conversation with Sjord recently. He's been doing some advanced trader programs. And one guy that he's working with recently is sort of like, well, every day I start up my screen and I have both a bullish and a bearish scenario painted. So actually, I do kind of like how... remember we looked at Ethereum and we see that lower time frame. You probably also see it here. So in essence, if that lower time frame bearish setup, that inside bar, if that fails, right, Ethereum's going to go up through its high, what did we say, 239, whatever. I could see that this would actually fire a signal here for Litecoin off 45.80. So that's actually a bit of a surprise. I wasn't expecting to see that. I'll be honest with you. So, risk takers got to take a risk. In this particular case, if you played this low here is 39.34. That's pretty close. You're basically risking about $5-6 to try and make $20. It's not bad. What is that? 5, 6. We'll call it 7 to 20, right? So 3 to 1. That's not a big surprise. I don't know whether I would be too inclined to take that, but I guess the way that I would look at that is if this bullish scenario did develop and come in, then it would probably support other sort of long ideas that I have in the market right now. So we'll see how this goes. I mean, that'd be awesome if Bitcoin could go and bust out through the top and we're in a rip-roaring bull. Fucking go for it, man. The way I would want to sort of play a new bull run, I don't know whether I'd want to play Litecoin, but there is a coin that I went and bought. We talked about it a little bit in the recent free videos, and I kind of want to just build a position in this thing. Is There's bread. I thought this was such a cool chart. So, if we just look at a weekly chart, what do you think? Has this thing got any room to move up at all? I mean, we can't even see price action here right now. I mean, what a mess. So, if I can get like a candle like any of these through this nonsense, any of these kind of candles, I can get off a double really easily. Because look, if I go and buy it here and I get one of these nutso crazy ass wicks, then bang, I've got a free position established. And, is this realistic? You might be like shopping through here, right? And you go, okay, well, what's a realistic? I'm not shooting for the moon, but what's just a realistic objective? How about 50% rule? So if you're trying to come in, maybe about a reload zone against these lows, I don't know, you're a totally awesome trader, whoever you are. Notice that, rally into 50% roll, rally into 50% roll, rally into 50% roll. That's actually not a bad little targeting tool. And I don't know whether we got it here or not. Doesn't look like it. Don't know whether you'd want to go off of that high, but you can see we, off of this low here, we had a pretty good rally. I mean, even if you went off of that high, that was 50%. And if you go off of these highs, that was easily 50%. So, same sort of thing. I kind of looked at this longer-term weekly chart, and I just said, well, is it realistic to get a move to 50%? I'm not looking for a move up here. I'm just looking for, is it realistic for us to trade back? You can see big old wick there, right? There's probably a bunch of trap bulls that would love to get out of there. Same thing there. The original market structure failure level there. Is that a realistic objective? I think so. I don't think it's asking for too much. So, I kind of looked at this name, and I know a lot of people are super jazzed about this. I went on social media, and I looked at their platform, Bread Wallet, all that kind of stuff. I mean, yeah, it's just another crypto name. So, I think probably the cincher for me was I looked at this a couple days ago, and I was like, holy crap. What letter of the alphabet does that look like? So whenever I see this, I'm like, so that, I mean, it shouldn't surprise anybody. The issue yesterday was it was moving up nicely. It was a weekend crypto, that kind of stuff. And I was just kind of like, you know what? I got some bids working, but you can see market just was like, fuck you, Brian. I'm just moving higher. And so I was just like, this is a W. You can all see the W now on a daily basis. This is a confirmed clothesline W now. So I was like, screw it, man. I just want some on the books. Just go and grab some. And in my humble opinion, looking at a chart like this, to me, this is not chasing. At the same time, too, I also told the community, though, that I did half of the purchase here. And I will use pullbacks, reload zone, wicks and tails like to be eaten to add to the other side. So in a weird sort of way, it's kind of like, okay, well, if crypto is a bull and we all start going face ripping, this thing won't come back down to the bottom. And I've just got this piece on and I'll just ride this trade. If, however, crypto does have to pull back, then okay, that's a win because I really don't mind buying some of this down against the bottom here. And I guess the way that I look at this is I would actually prefer to look at this versus US dollars. And versus US dollars, actually, it's not a bad looking chart. So that's probably the primary way I was looking at this. I did, obviously I did it in Bitcoin. I used Bitcoin to fund this. But, there's the US dollar chart. That's not a bad level to come in. So this W came in. I was like, screw it. I'll just go grab some. And if I can pick up a bit more on any kind of pullbacks against the low, I'll do that. And, just like I said before, has this thing got any room to run up here? I think so. So that's sort of, if am I interested in buying crypto right now? Well, It's going to have to look very WE for me to get involved. And when I do see it, I do see those W's, I'll be more than happy to go pick some up. And that's what I did. So there you go. Merry Christmas. Okay, so we covered questions from the level 1ers. I hope that helped. I sure hope I didn't miss anybody. Maybe next week through class, I'll maybe go through that document and make it look a little bit crisper so I understand exactly what I was supposed to do there today. We talked a little bit about broader stock market. Stock exchange shouldn't surprise us, looking a little bit toppy. Talked a little bit about the US dollar. Also talked a little bit about gold there. We gave you a pretty good look at Bitcoin and Ethereum and Litecoin here. And we took a look at a little altcoin. So it's about 1 o'clock. I head off and have my afternoon with the boy. So, if you enjoyed the offering, you felt like you got some value out of this, what do we say? Hit the like button, subscribe so that you'll know when we do stuff in the future. Ring Colleen's bell so that she gets a little bit of good luck from all of this. And have yourselves an awesome rest of your day. And we'll see everybody bright and early first thing tomorrow morning. All right, everybody, have yourselves a great day. All the best, and bye for now.